Traders, welcome back to another Relentless recap. How did you guys do today? Let me know down in the comments. How did you do? Let me know. Let's jump into the recap. No long talking. Let's just jump straight into it, right? You guys know the drill. Hit that thumbs up if you do enjoy the video towards the end. Subscribe as well. Two stocks traded today, PKBO and SNTG. SNTG started the day by selling off. Pre-market, this thing is on watch. It was my only stock on the watch list at that point. We got a high of 598. It pulls back, sells off hard, and grinds up a little bit coming into the open. We do start off with some green candles. I don't take it seriously here. It does pull back, after rejecting the low of the pullback, right? Low of the pullback from the first move up, right? We had lows at 501. It grinds its way to 501, rejects, and then sells off, halts down. Now, on the resumption, this is where things got interesting. On the resumption, we started curling up, and 532, I believe, was the first level that we've hit here after dipping and ripping. 535, the halt level where we went down. So 530 to 535, 540 was a huge area for this stock, and because of the context of how things played out and how the day started, I was not aggressive, and it cost me. So first entry at 535, well, rather 435, I did not take. This results into a push to 440 and then 450, and it actually was very strong. It rips to 78. That was a beautiful move from 35 to 78. Now, it wasn't very quick. You would have to hold a little bit, but still, even if you came in and out, opportunities nevertheless. Now, this is where I was about to take my next trade, right? In terms of entry, right? If it's a stronger day and it's a stronger start, I'd definitely be in down here, right? But I considered getting long in this area here. This is a micro pullback, right? Micro pullback from a high of 78 to a low of 64. And I'm watching this, I'm watching my tape, I'm watching my level 2, and I'm like, man, it just feels like it's high. It feels like it's high up. And I even mentioned it's holding high. Now, when a stock is holding high, what do I usually do? If I notice that it's not dipping down as much as I would like, I usually go long. Because ultimately it's a sign of strength. It's holding up so well. I didn't take it. Second area where I'm second guessing the trade and not being confident because of the circumstance of how the stock is breaking out and the move it's giving. It's like if I erase this big drop right here and I go like this, if I came in today and I had no idea that drop happened and I just saw this for the candlestick on the 5, it would have been over. Second guessing, man. Second guessing. So now I miss entries in this range. And, the rest was history. Now, if I'm not taking these two entries, I'm not taking high of day. High of day at that point was at 5. Break of 5, I also did not take. So I missed 3 entries going up, which was just quite unfortunate, man. Quite unfortunate. It rips over 5. It gets halted up, and we get halted at 511. On the resumption, I believe this is where I started to take trades. So let's come back here and put on our show trade feature. On the resumption is where I started to take trades, and I was watching for a dip and rip, or a rip, let's say rip, dip, rip again, right? That's more like it. Rip, then dip, then rip again. And that's what we got. It opened up, right? We resumed at 520. I believe it went up first and then pulled back. And so it made a low of 512. It came right back into the halt level. Really and truly, that's where I should have been getting long. But I wasn't as aggressive as I should have been to buy the low, right? This trade, I'm buying that area and just putting a tight stop in place. It's very risky. It is very risky. The risk is very real. Halt levels for me, halt resumptions, let's say in general, for me are neck and neck in terms of volatility when it comes to the open, right? The gap and go. The gap and go is a high risk trade because There's a lot of volume coming in, a lot of people, a lot of different decisions. You know, big buyers, big sellers, shorts, longs, everybody mixed in. And so the risk is real here, right? So you got to trust the setup. You got to be confident, and you cannot hesitate, because if you hesitate, the trade is gone. Blink and you will miss it, right? So I bought at 22, and we can pull up some live archives, right? I bought at 22, and I don't even know what happened with my fill. I mean, I got a terrible fill. I think is my. I hope everything is blocked. Okay. Let's see. Okay, I have to make sure my account information is not showing, which it's not. Let's watch this here. So, let's see, resumption. Here. By the way, also, consider the fact that I'm using, look at the share size I'm using. So today, all my winning trades came from small share size. All my losing trades came from my bigger share size. And it's nothing to do with holding longer or selling too fast. It was just the fact that I thought that the day was a weak day, so I didn't put share size out there to begin with. It's as simple as that. And so it's a little unfortunate. You know, I'm using 500 shares on this stock when I should be using 2,500 3K shares or more, you know? So here we go, 511. Look at this, 30, 33. It dips down. And right here is where I thought I was buying, and I was slow. I waited for green, that's why. I waited for too much green. 17. You see this green? I should have already hit the buy button. There we go. I'm finally hitting buy, but you know, I'm going to get a higher fill, and I guess rightfully so. I'm buying between 25 and 31. I shouldn't be filled higher than 31 here. Let's see. I'm filled at 31. Jeez Louise. Of course, they don't waste any time giving me the highest fill possible. Okay, cool. Now, I was a little late. That's on me. And let's see. 39 by 44. I sold between 41 and 43. I should have gotten a fill out in that range. I don't think I did, not even close, because my P&L unrealized on the ask is at 43. Actually, let's see. Maybe I did. Yeah, I did. I actually did. So I'm out of this trade at 42, 41. And it continues going. So after it dips there, and I'll let the whole thing play. Some of you guys, let's go back one more. I'll let the whole thing play, and then I gotta remember to do that. Let the entire thing play, then pause along the way. Alright, so here we go. There it is. It doesn't really dip to 12 like how the wick is showing the low of 12. I don't, you know, we're seeing 17. 17, 17, 17. I'm in. It rips. It dips again and then rips. And I didn't get back in. Why? I feel like the range wasn't big enough. If we would have made a high of 50 and then dip, I would have took it again. But, you know. This trade, I'm in late. I'm in 10 cents higher than I should have been in. And I'm also using just 500 shares. So if I'm using 2,500 shares and I actually bought at 18, 19, 20, 21, I would have been up 500 on this trade, right? That's kind of how I'm looking at it if the trade was actually a successful trade. I'm going to try to buy a dip here, I believe. Yep, I'm in at 39. I don't think this is going to work. Hold on. What are the fills? I'm in at... Okay, see, and okay, this is... Alright, makes sense. I'm in 2,500 shares now. Because now I'm feeling like, okay, the stock actually is moving well. You know, the stock is moving well. We had a resumption, aka a reset, right? And when I say reset, what do I mean? The stock has been going up forever. It's extended. To me, once there's a halt resumption, the extension in my mind doesn't matter anymore. The halt resumption provides a new set of entries. There's a reset, and it's why at certain particular points in time, I actually want the stock to get halted. Alright? Different ways. People will look at it in different ways. Different traders will look at it differently. So I'm in at 39. Ultimately, I feel like, okay, maybe it needs to pull back. And so I'm watching for a dip, I believe. And no, I took it high. I took it at 33. I believe it's going to go lower here. It's not ready yet. Yep, and right there, right here, look at my sell, right? Look at this sell. Look at this sell. Right here, I'm hitting the sell button. I'm mark. It's hard because this screen is smaller compared to the main screen, but I'm hitting the sell button right here. Actually, did I? Okay, not yet. We're gonna see when that cursor comes up. There we go. I sold in the nick of time. I almost got caught. In the nick of time, I sold right here. In the nick of time. Because it's not going. I'm in. I'm expecting it to bounce. No, it means that the pullback wants to go lower. So I'm selling. I'm out. 21. And you see, the issue here. The issue here is that I'm selling and I'm not buying back. I should have been back in already. Yep. From 21, there's 33. Alright, looking into the spreads. Looking into the level 2. There we go. Okay, bought 24, and this particular trade. So this comes down again. It's showing that it's holding the bids at 21. And if you guys listen to the live stream, I said, okay, I think we've bottomed. And you know what I did like an idiot? I sold this position early. Watch this. 30, 30. In my mind, I thought it was gonna come down one more time, and then go maybe potentially make a new low. But even if that's the case, it's like this entry is so low already that I might as well just hold it, you know? Because I'm going to sell it right here. Took it off right there between 28 and 31. And it's not a good trade. It's really not a good trade. There's a better trade here. And even this is not a great place to sell all. I should be selling, you know, some. I should have went to 500 share blocks and, you know, hit sell, 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 sell. And keep holding, because right here, this should get back to high of day. And if we fast forward, there's 40, high of 40 for me. From 24 to 40 is not terrible, but let's see, it pulls back. 18, 15, 14. What's the volume profile looking like on 5 minute? It breaks down, doesn't hold. Did I get caught in this? I got caught somewhere. Hold on. I got caught in a trade somewhere here. So it turns out that it's not going to hold up. Hold on. Of course, real time, you got to use your best discretion and be prepared for the loss if it happens anyways. You see? Okay, so I tried to buy back 26 because I thought it was holding this area. And it looks like it's going to go lower. I'm out already. I'm out already. I'm out already. I'm in at 26. I'm selling at what, 21? Oh, this is the trade that wasn't getting filled. Oh yeah, I forgot this happened. So look at this. I'm gonna sell, and nothing is gonna happen here. What's going on with this thing? Jeez. This is Friday. Today's Friday. We can do a long recap. Doesn't matter. In fact, it's been so long since we had one of these. There's a sell. It's not selling. 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 Okay, no, never mind. There's the sell. It's not selling. It's not selling. It's not selling. You see that nonsense right there? It wasn't as bad. We gotta wait for it to pop right here. So I'm in. It wasn't as bad, but it was terrible. There it is. There's a sell order. There's a sell order. You see this nonsense? You see that? You see what is this? What is this? I should have been out at 23, 24. At the lowest. At the lowest. I tell you, man. think or swim, think or swim, think or swim, think or swim. 15 on the. If this flushes down, if this flushes down to 480, what if this is the flush? I'm doomed. I'm not gonna get filled until 480, and just like that, think or swim with their nonsense fill, it's gonna cost me. Let's turn on the volume. Watching. Risky trades, risky business. Bro, what the look at this, look at this. Really? Yo, really? Is that look is that what's happening today? And that was a distraction as well, when this type of thing happened to you, it makes you cautious of trying to buy. I mean, I was already too cautious already to start the day, much less for that. Right? Anyhow, I think we came on here for the resumption trade, which I don't even know if we looked at. Yeah, actually we did. Yeah, so the resumption, we made some money. We tried to buy the dip. We got a terrible fill coming out. In fact, let's go check that fill to see how bad it was. Let's see. Time was at 9:48, 9:43, somewhere in that range. Okay. 9:58, 48. Look at this. So instead, look right. Yeah, okay. Here it is. This one right here. Instead of being out at 23 and 24, losing $75, I'm out at 21, 24. Only 100 shares getting filled at 24, and the bulk of the shares are filled at 17. This is highway robbery. This is highway robbery right here. This is 6 cents of slippage when there were bids coming in. The stock is liquid. I gotta call them and get my money back. 2,500 times 0.066 cents. 150. They robbed me 150 on this fill. This should have never even happened. Then, of course, it's also a distraction. It makes you more hesitant because now you don't know if the broker is working. I mean, just a whole heap of just nonsense, really. Nonsense. We took trades in here. Let's see, 50. We had a low of 14. I don't remember if, let's see, we can look through on here. I don't remember what happened really, to be honest. Well, okay, we tried to buy back. Let's see, because we had another loss. I didn't touch it. It doesn't look like I touched it until, I mean, even after the resumption. Oh, I remember. It was so strong that I didn't even get an entry on this resumption. Watch this. This was so strong. Well, I think there was one entry. But I wasn't aggressive enough to take it. 537 halt price. Here we go. 42. 60. You see that hesitation there at 50? That was the entry. I don't know if everybody saw that. It rips. It's holding high, man. So strong. This is like a hot market resumption here. From 37, it's, we open up just at 42, slightly higher. And then it goes. 61 for the highs. 61 for the highs. 55 on the bids. And now watch this. 51, 51, 52, 52, 50. Boom. It goes all right. It barely even pauses to give you that chance to get in, which is why I didn't get in. This entry, though, you can see it, but you got to be aggressive to take it. It's essentially a high-day entry. I mean, I took those entries before. Like, if you guys go back and watch AERC, that was that type of entry, basically. But that was like a $16 stock or $12 stock. AERC. it's the same entries over and over, man. You know, it's nothing special, nothing that I haven't shown already throughout the years. But yeah, that was the second resumption, and this is the type of trade you're taking on a day if you're very green already, and you're not hesitating for every single trade that's already came. You know, if you're aggressive, you're dialed in your zone. You're long at 55. If you're a scalper, scalping, you know, very quickly in 55, it rips, or maybe you got to fill at 58, 60 even. But you know, who cares? It goes to 85, 90 for, you know, and false halts. For me, I'm already selling into the halt, so I don't mind if it's a false halt. But you know, that's the type of trading I'm looking forward to. So yeah, that happened, and the way how we made money. Now, if we look at this resumption, I tell you, man, this thing sells off with lighter volume. It crawls back up. I took trades on the dip. And I ended up taking some nice entries on some lower. So we made a high of like 540. It pulls back to the whole dollar. I'm in at 505. But you can see I'm using baby share size of 500 shares. So here I am in at 513 average. I'm going to sell these shares. And then I'm going to get back in slightly lower. And the stock is at 530 here. If I'm using my full share size, you know, as mentioned, all my big trades came on small shares today. If I'm using my full share size of 2,500 shares, you know, at 530 here at the highs, what is that, 25 cents? You know, it's a $750 trade, you know. Assuming that I didn't sell anything, but, you know, I did sell half. So, you know, maybe I would have been up like 500 something there. What a disappointing day. And, you know, at this point, what I did, I told myself, hey, you've missed the first move. You've missed the second move. This resumption was so strong, you also missed the second move. This is the third leg, which is now the riskier part of the day. It's best for you not to be too aggressive. That's what I told myself in reduced size again. And I made back money. You know, I made back the loss. I mean, PKBO, I'm watching at this thing. It's all over on the other side, right? Watch this. Let's fast forward. PKBO. My goodness, man. So don't forget that dip and rip on SNTG that I took earlier, right? The second resumption was strong. The dip was from 61 to 51, and it didn't really hold, right? Watch this dip and rip right here. So we're halted for 10 minutes. Actually, let's see, there might have been two dip and rips. So watch this one, right? Let's see, we're halted at 707. We resume. It starts to rip. 60. It dips 42, 42, 42, 42, 42, 42, 42, 42, 42 on the bids. Boom. Into the highs. Can that flush down to $7, $6.90? Of course it can. It happens. I've got caught in a few. But are you willing to take this risk? And once again, look at my share size. Oh my god, man. I hate when the days play out like this and it just, you know, I make the best decision at the time that I think is the most smart, you know, the smartest thing to do. Hey, the best two opportunities on this stock now is the third leg, reduced size. Of course, you know, I see some winning trades. And then now I'm still have that same mindset of like, okay, you know, take it slow. The day might be over. This stock might be weak. Cause I didn't like this stock initially because the spreads were terrible. And in fact, if we listen in, let's actually listen in, right? Let's listen into this. Let's listen into how I'm looking at the stock in terms of the spreads. 43, good resumption. Spreads are fairly tight. Watching. You see what I did there? I waited for some buying on the ask. Usually I don't even wait for that, and I did in this situation. And I'm long at 58, and you see, and this is the problem, right? I mean, sometimes I tell you with these stocks, if you wait for so much buying on the ask like I just did, this is the issue, getting filled so high. I want to be in between 43 and 750 the highest. Instead, I'm in at 58. Spreads are fairly tight. Watching. In the moment I buy, the spreads are kind of tight, but then they open up to 20-cent spreads again. And I'm filled very high up. It is a great trade though, right? Well, what was the entry here, right? Relentless. What was the entry? Right? What was the entry? What was the entry? Can we rip and then dip? The resumption itself is a rip. Even if we don't have a candlestick here, let's go to the actual stock. E-Trade. We don't need to sign in. PKBO. This resumption was at. We resumed at 7:34. We're halted up at 7:07. It opens at 7:34. Even if this opens at 7:34 and slams back down to like 690, I could still take the dip there. It just depends. It's very situational, right? But anyhow, it opens up at 7:34, it rips to 7:64, and then it pulls back. All right, so let's go back to the archive and watch that one more time. 7:07. 7:07. Boom. 64 on the ask. It drops us to 42, 42, 42, 42, 42, 42 by 45, 42 by 45. I wait an eternity to buy, which was like too long, and then I'm selling it like 76, 77. We do get a high of 90, then 07 on the ask. This is not the perfect trade, but even with size, it's worthy. This trade is worthy with size. If we go look at it, that was at 1040. At 1040, we're buying at 52, and you can see my first order actually got filled at 52, where I should have gotten the entire thing filled. You know, below, I believe as high as 50, 51 maybe. But anyhow, I'm out at 74, which is even a little lower than I thought I got in the fill. This is what? A terrible trade, ultimately, in my mind. From 60 to 74, 14 cents. I needed to be in at 46. Watch, let's do the math. 46 minus, let's say, 76. 30 cents. I should have made 30 cents on this trade. I only made 14 cents. Terrible. Awful. Poor risk to reward because of how high I'm in and how low I'm out, relatively speaking to the high of 807. Right? But, it's better than nothing. It's something. And right here, I'm like, okay, I'm going to use 1,000 shares, and let's see what it does. Can we get the same trade? What is the risk that I always talk about in the markets? 5 seconds for anyone to answer down in the comments without cheating. What is the number one risk for me as a trader? The flush. The flush is my only risk, let's say my most frequent risk, right? There are other risks, right? Getting compromised emotionally, getting caught in a secondary offering, going down, in a halt going down for a secondary offering, those type of things. Maybe a halt up and it's a secondary offering and it resumes, a couple dollars a share lower, whatever the case might be, right? But the flush is the most, frequent risk. And so let's watch this resumption here. Now I go to 1,000 shares. Hold on. Hold up. Now I go to 1,000 shares. I'm like, okay, let's see that same exact trade again. But, if I'm green on the day, if I traded the other stock without hesitating and I'm up like 800, 1,000, 1,500, it is game on. I assess my risk to the maximum so that I'm never surprised. But how often is the risk going to go to the maximum? Not that often. So if I'm going long in this trade, I asked myself how much money could I potentially lose. Worst case scenario. Okay, maybe you lose 50 cents, worst case scenario, but what are the odds of that happening? Not that likely, in my opinion. It comes down to you as the individual, and like how many times you've seen the resumptions, and you know how you want to approach it based off of what you know and what you see. Because there's days where the resumptions are not working well. You know, here we go. What is my stop in that trade, by the way? Let's let it play again with volume. $10. PKBO. We're halted at 807. I think we're clear until 981 for resistance. Beautiful resumption. Can we dip? Can we dip? Can we dip? Can we dip? Taking it to the moon. To the moon. That was lovely. Absolutely beautiful. Absolutely beautiful. Indeed it was, because we're halted at 807, and that's the beauty, and it's also why some traders love to hold into the halts, because a lot of the times we'll resume so much higher. If you're holding this with an average of like, 750, 780, you get another 30 cents just in the resumption. So what is my risk in this trade? My risk in this trade is a flush. That's my only risk in this trade. So we resume, and we can get the resumption price. Let's go get it. Resumption price was at 847. From 807, we resumed 40 cents higher. It's saying that we had a low of 831, and that might have been after it came back down, right? So we resume at 847. Can we see a rip, then a dip, and then a rip again? Rip. Can we see a rip? Yes. Can we see a dip? Can we see a rip again? We see 40 and then 58 flashes, then 40. What is my stop right here? If I see anything below 40, I'm out of this trade. Boom. To the moon. To the moon. I should have gotten a higher fill than just $9, but it is what it is. But yeah, if you're not using level 2, there's no way. I mean, it depends. I mean, I don't know. It depends. I don't know. I think without level 2, there's no way you can take this trade. Rips to 9. Man. But guess what? The days are going to come where I take 940. And what's the enemy? What's my number one enemy? The flush. Because if this gradually breaks down and goes to 35, 30, 25, 20, and I lose 20 cents, who cares? Like 20 cents is nothing for a stock like this that can go up 60 cents in 2 seconds. Who cares about 20 cents? Nobody, So 20, and it's why I assess the risk to the extreme all the time. I don't even consider flat trades of me being, let's say I had bought at 40 and it went to 50, 55, and it wasn't going higher, and I sold for like 10 cents of gain. I wouldn't even consider that a win. This, on a stock at $2, that's a great win. On this stock, and it stocks at like 9, 10, 11, 12, so forth, it's a different story. It's a much different story. And so, you have to have the intuition. You have to not hesitate. You have to just go for it. I see 840 on the bids. That's all I need to see. I get a great fill because I am buying market here. I get a great fill because I could have gotten filled maybe 50. And you guys saw on the last trade where I waited a little bit. I got filled 10 cents higher on the last halt resumption we looked at. Boom. Beautiful, man. Well, okay, $9 was a great exit. This, in stronger markets, there are more entries here that I see. Watch this drop here. Watch this. Watch this. Watch this. Boom. Right here. 64 by 74. And I'll let it play. Let's go back and let that play. 9. Watch the drop. Watch the drop. Watch the drop. 64. It's fast though. You know, it's kind of fast. 64 is gonna come to 64 again. 64. You see, this is the second time sitting 61. Now it's taking. Yeah, now it's taking too long. It's hesitating. These trades though, it's up to you to have the discretion. It's up to you to be quick. It's up to you, the trader, to be fast. You know, and the only way to get the fills down there below 60 is if you have orders sitting on the ladder, I think. Because it just comes down so fast and pops back up. 42, well, yeah, 42, 40 hits the bids right there for a second. But it's so hard to get that entry. And for me, to be honest, this is not an entry I would ever take if it hits 40 again. I think it's just, it shouldn't even happen in my opinion. But in this case, it did. And it's also sometimes what can throw off my analysis. Because once we come down and we make the new high, there is no coming down again in the hotter days. Like, you guys can go back to your own footage and watch stocks like PHUN when it's halting up and see how it reacts. Once we start making the new high, the dip isn't really going back down. It's like, and you know, all this stuff is like, the reason why these trades are sometimes hard to take too is that there's not just one thing going on. There's many things going on at the same time. And for every single breakout, right? Let's bring up the drawing tool here. For every single breakout that there is, ideally, if we can hold 50% of the move, that is really good. So let's say a stock goes from $1, right? From $1, it goes up to 2, right? Then it pulls back. Can we hold, you know, 150? Can we hold 150? This is ideal if we can hold one, because the worst thing is, or well, let's say not worst thing, but what it's hard to buy a dip when a stock goes up $1 a share and then drops $1 a share for the dip and then go up $1 a share for the rip. That is hard. But when we go up $1 a share and we drop 50 cents, we hold half the pullback, and then we go up to $3. You know, it's, or let's say rather 250, right? If we go to 250, right? This is now 250. It's much more linear and easier to understand. And so now when we're dipping again, can we dip and hold $2 in this range? Maybe 195. It might not be $2 exactly. Maybe 195. Maybe 205, 210. Maybe 190. We will never know. We will never know. But it now comes down to you as the trader. So when we go from, you know, what was the example here? When we go from 807 to then 860, well, rather, I can't even remember the price of this thing. Yeah, 807, it rips to 9. From $9, we drop what, 60%. This particular dip was, instead of this example of 50%, this dip here was 60%. It dropped 60 cents. And then it rips up. And that's why it's hard to take the second dip when the second dip also comes right back down to 840. I would have wanted to see it break 9. We did. We had a high of 913. And can we at that point hold like 860? So here we go. Boom, 9. It dips 40, it holds, it rips 906. In fact, it goes to a high of 923. It goes to a high of 923. So when this drops down to 860, it's now pulled back 60 cents. Right? 860 from 9 is 40 cents plus another 23 cents. So this thing drops 63 cents. Watch this. Watch the bids. Watch the bids. You see 63? 63. Now, the reason why I don't even let's not account, but consider this trade is because of the spreads. 863 by 891. if I market into this, I'm gonna get filled at $9. Let's call it what it is. If you have the offsets and you can get in 65 or something, I mean that's great. But it's still risky. Just like the first dip, there's no guarantee that this dip is gonna hold. But let's say you get filled at 63. I would be expecting a retest of 923, 920. It goes to what? $9. It's having trouble at 9. It's the milliseconds that matter, and it's like if our trades could have been so fast to the point where there was no slippage and you could be in at the price you want to be in and be out at the price you want to be out, I would take all these trades. It's only because I have to be worrying about slippage and then the nonsense of the spreads is the only reason why I wouldn't take 64 and already not be out at 9. Because when it gets back to 9, it shows that it's struggling. So 64, watch the ask. 9, in strong stocks. This will go through 9 before you could even think. And that's the indicator. The fact that the stocks that are strong, if this would have already been back at 920, it's like, I don't know how else to explain it. It's like, on the stronger stocks, we would have already been back at 920 already. Maybe even 950. So the simple fact that this is at 9, like look at the milliseconds, right, as to how long it's at 9. So let's rewind. So here's the first push to 9. I'm selling. It dips to 860. Watch this. 864. 9, 9, 9, 9, 9, 99, 99. Why is it not going? That's already enough to be out of this trade. So right here, I wouldn't trust this. And then, boom, yeah, it goes to 40. So why are we breaking out $1 a share just to pull back $1 a share? And like I talk about this stuff all the time. For the people who are listening every day, and if you're watching to this point in the recap, you're one of the people who are listening. Most people have already clicked off and gone a long time ago, right? Slacking. But anyhows, there's something in my eye. Anyhows, I talk about it all the time. The best pullbacks hold at least, let's say 50% of the move. But it's not guaranteed that it always does. It might be 40% of the move it holds, in which case you can say it's a stronger stock because it didn't pull back as heavy. Maybe it overshoots. In this case, it's a 60-cent drop off. Because the move really and truly started from 807, or let's say $8. We go to 9. It pulls back to 840. That's a significant drop off. And then now from 923, instead of holding 860, it drops down to 840. That's the type of dip I hate. That stops me out of the trade. If I take that, risk, it stops me out of the trade. But yeah, so that's the recap. Hope you guys did enjoy. We're pushing now 1 hour, 2-3 hours. Yeah, that's the recap. Nothing that I have not shown before. It should have been a much better day. I just was too hesitant, not aggressive enough. All my big trades came with small size. If man, I hate saying if, but had the circumstances been slightly stronger to start the day, I would have dominated this day. I guarantee you guys I would have dominated this day. It's only because this nonsense sold off like it did and made me hesitate. Like, look at this big drop. The offerings have been looming over our heads. It's halted down. Our strongest stocks never halt down into the open. Just think about that. Our strongest stocks never halt down into the open. That's why it played out like how it played out. This was the right way. This is what needed to happen. Because ultimately, this is why I'm profitable, is because of how I manage risk. Hey, this stock was halted down. Maybe you shouldn't even take this trade. Maybe this trade is going to be a false breakout trade. And it's an excessive amount of confirmation that has to go on for me to finally say, okay, yeah, this thing is actually strong, despite this weakness that we saw earlier in the day. And so we'll continue to push forward. We'll continue to be better. We just got to find ways to, recognize the momentum sooner and to be an offensive sooner, because that's what this day was. That was what was required for this day to be a strong day, in my opinion, from what I see and how I see the markets. It might be different for other people, but from what I see and what I know and what the entries I saw, this was a day for me to be on the offensive. And unfortunately, I was very defensive today. I was ultra defensive today. Even once I sized up and I didn't connect, I sized back down. I was very conservative. Any other day where we open up and there's a green candle for a gap and go and we dip and we go, it's over. Big size, max size all the way. We're sending it. We accept the risk. We know the deal. Ladies and gentlemen, it's been Relentless Trader. Enjoy your weekend. And of course, signing out. Hit that thumbs up. Let me know if you watched till the end. If you did watch all the way till the end, type Red Dragon down below. Red Dragon. That's the keyboard brand that I'm using here. Red Dragon. Type it down below. Let me know who's watching and who's not slacking off, because majority of people clicked off in the first 5 minutes. Catch you guys later. It's been Relentless Trader. And I am, of course, signing out.